Singapore's core inflation has hit its highest in almost a decade. It rose to 2.4% on year in January, up slightly from 2.1% the previous month. Now, this was driven by higher food, electricity and gas prices. One analyst says the ongoing Russia-Ukraine crisis is pushing up oil prices and the situation's likely to get worse before it gets better.
The biggest uncertainty is how high will it go? So that is the biggest risk, and that if global energy prices continue to trend higher, there will definitely be a spillover effect onto the domestic economy.
Prices of utilities and other fuels spiked by nearly 12%, while seafood jumped by more than 6%. Meanwhile, headline consumer price index stayed at 4%, thanks to a smaller increase in car prices, which helped offset higher core and accommodation inflation. However, the Monetary Authority of Singapore warns that global inflation could stay high for some time due to heightened geopolitical risks and tight supply conditions.
If inflation continues to surprise on the upside, if global energy prices and food prices continue to climb higher, I think it will pave the way for another round of tightening by the central bank. When inflation starts to ease off towards the end of the year, do not expect prices to come off, because that is simply year-on-year base effect at play.
Core inflation is projected to reach 3% by the middle of the year before easing in the second half. The domestic labour market is also expected to tighten, putting more pressure on wages.